This man convinced the smartest investors on Earth that a company renting out desks was worth $47 billion, more than SpaceX, more than Ford. His name is Adam Neumann. He walked barefoot through his offices, served tequila to the employees he had just fired, and told the world he wanted to elevate its consciousness. And they believed him. Bankers believed him. Billionaires believed him. Right up until the day a single document proved that the most valuable startup in America was built on a lie only one man could sell. This is the story of how Adam Neumann fooled the world, and how it took just 6 weeks to destroy him. To understand WeWork's collapse, look past the empty offices and corporate obituaries. This is a study of a man who discovered that a feeling is far more valuable than the truth. The business itself was entirely ordinary. WeWork leased office buildings long-term, divided the floors into smaller desks, and rented them out to freelancers month to month. It was basic real estate, repackaged. Yet Neumann wrapped this mundane transaction in a powerful emotional story. He sold belonging and community, transforming a desk rental business into a pseudo-spiritual movement. Suddenly, pointing out that the math did not work was framed as a lack of imagination. Neumann made doubt look uncool, convincing everyone that basic arithmetic was simply a sign of a small mind. He weaponized belief, and for a decade, belief was enough to beat the numbers. Long before WeWork, Adam Neumann was a salesman in search of a product. He tried selling women's shoes with collapsible heels. Then came Crawlers, a baby clothesline with built-in knee pads, marketed with the earnest slogan, "Just because they don't tell you doesn't mean they don't hurt." Both projects lost money, but they proved Neumann could sell an emotional narrative to almost anyone. In May 2008, he found his perfect foil in Miguel McKelvey, a quiet architect raised in an Oregon commune. Together, they launched Green Desk in Brooklyn. It was the rehearsal. In 2010, they sold it to Open WeWork at 154 Grand Street in Soho. McKelvey designed the physical reality: power-washed brick, glass walls, communal tables, and free beer on tap. But Neumann sold the intangible. He realized they were not renting desks, they were selling belonging. And because you cannot easily measure loneliness, belonging had no obvious price ceiling. McKelvey built the rooms, but Neumann built the myth. It is why, years later, the company's official IPO filing would mention Adam's name 169 times and Miguel's only 6. Neumann stopped acting like a traditional executive and began behaving like a secular prophet. Inside WeWork's offices, the atmosphere began to resemble a revival. Employees gathered at mandatory retreats to chant corporate slogans, while Neumann walked barefoot through the halls, projecting an aura of absolute certainty. He discarded pitches about office subleases to preach a mission of elevating the world's consciousness. By framing WeWork around the concept of we over me, he transformed a mundane commercial lease into a communal identity. This was Max Weber's concept of charismatic authority in real time. Legitimacy did not come from rational legal structures, audited financials, or corporate governance. It rested entirely on the perceived extraordinary qualities of a single leader. Faith in the founder replaced institutional scrutiny. When a leader claims to be raising the consciousness of the planet, asking about lease liabilities starts to feel remarkably small-minded. The internal spell was complete, but to scale this movement globally, Neumann needed external validation from the highest levels of global finance. He needed a believer with billions of dollars to burn. Masayoshi Son was the head of SoftBank, a Japanese conglomerate commanding the newly launched $100 billion Vision Fund. Son didn't just invest capital, he wielded it to reshape market reality. When he walked into WeWork's headquarters on December 6, 2016, he planned to stay for 2 hours. He left after just 12 minutes, but those 12 minutes changed the physics of the company forever. During a brief tour of the offices, Neumann's charisma locked onto Son's hunger for hypergrowth. Son invited Neumann to ride with him in his SUV to Trump Tower, just 38 blocks away. In the back seat, Son pulled out an iPad and sketched a preliminary agreement, a $4.4 billion investment that valued WeWork at an astonishing $20 billion. It was a deal struck in minutes, based on a feeling. For Neumann, this was the ultimate validation. If the world's most aggressive tech investor believed WeWork was worth billions, Any skeptic asking about basic real estate math looked foolish. Son's endorsement functioned as both authority and social proof in one unshakable shield. Armed with SoftBank's billions, Neumann launched a reckless global expansion, opening hundreds of locations across cities worldwide. He treated this backing as absolute proof that his instincts were nearly divine. But this massive influx of capital was not a cure, it was an accelerant. WeWork's core business model had a fatal structural flaw. The company signed long-term leases on premium office buildings, committing to 15 years of fixed rent payments. Then, they subleased those same spaces to members on flexible, month-to-month terms. If the market turned, members could leave in 30 days, but WeWork remained on the hook for billions. By 2018, this mismatch was actively consuming the company. WeWork lost nearly $2 billion on less than $2 billion in annual revenue. To hide the bleeding, Neumann's team invented a bizarre new financial metric, community-adjusted EBITDA. This custom calculation stripped out core operating costs, including rent, marketing, and design expenses. It was a classic piece of creative accounting, functioning as a compact analogy to Enron's opaque financial presentation in the 90s, making a deeply unprofitable business look healthy on paper. But as long as new investment kept arriving, this massive cash burn could be sold as success. Neumann convinced the board that expansion would solve the unit economics. In reality, rapid growth didn't cure the underlying weakness. It only multiplied the losses, turning a small fire into a global furnace. Inside the company, normal corporate boundaries dissolved completely. Neumann walked barefoot through the dirty streets of Manhattan and down carpeted office hallways, projecting the relaxed aura of a spiritual guru. Meetings were regularly conducted over rounds of high-end tequila. In 2018, Neumann and his friends smoked so much marijuana on a chartered transatlantic Gulfstream jet that the flight crew later found a hidden stash and refused to fly the return leg, fearing drug trafficking charges. On the ground, the theatricality took a darker turn. After laying off 7% of his workforce to cut costs, Neumann immediately had trays of tequila carried into the room. He toasted the remaining employees and brought out Daryl McDaniels of the hip-hop group Run DMC to perform a live set. The mission to elevate human consciousness had officially separated from reality. While WeWork leased office buildings globally, Adam Neumann began purchasing commercial real estate himself, only to lease those same buildings back to his own company. This structure funneled millions of dollars in rent directly from WeWork's balance sheet into Neumann-controlled entities. The self-dealing extended to the brand itself. In early 2019, Neumann charged WeWork $5.9 million to acquire the trademark rights for the word "we," a payment reversed only after intense external scrutiny. Inside the company, governance functioned less like a modern corporation and more like a family dynasty. His wife, Rebecca Neumann, was named a co-founder and granted the statutory right to select the next chief executive if Adam became permanently disabled. This was no longer just a startup. It was a private monarchy designed to protect the family's absolute control, while the public-facing brand continued to preach selflessness and community. These arrangements remained buried in private books, shielding their personal wealth from the members paying for desks. But the trick that made them royalty was the same one about to destroy them. In January 2019, Neumann officially rebranded the business as the We Company. The new name was a declaration that they had outgrown mere office space. Under this new umbrella, WeWork expanded into We Live, a co-living venture, and We Grow, a private elementary school run by Rebecca Neumann. At its $47 billion peak, the company was no longer selling desks. Neumann was trying to build a physical civilization, fueled by his own brand of spiritual capitalism. He truly believed he was reshaping how humans lived, worked, and learned. But a civilization cannot run forever on private venture capital. To fund this massive expansion, Neumann needed to tap into the public stock market. That transition would force him to open his private books to Wall Street, where investors demanded a completely different kind of truth. On August 14, 2019, WeWork publicly filed its Form S-1 registration statement. For nearly a decade, the company's story had been told exclusively through Adam Neumann's voice. Now, for the first time, it was written in the dry, unyielding language of federal securities law. The filing exposed a massive gap between perception and reality. It revealed that in 2018, WeWork lost $1.9 billion on just $1.8 billion in revenue. Beneath the talk of raising global consciousness lay over $13 billion in long-term lease liabilities. Worse, the document detailed extensive self-dealing. Neumann had personally purchased commercial properties and leased them back to his own company. He had even charged WeWork $5.9 million just to use the word we. The governance structure was equally alarming, granting Neumann extraordinary voting control and giving his wife, Rebecca, the power to choose his successor. Psychologist Daniel Kahneman describes two modes of thought: System 1, which is fast, emotional, and intuitive, and System 2, which is slow, analytical, and logical. For years, investors operated on System 1, swept up in Neumann's charismatic energy. The S1 forced the world into System 2. Like the SEC filings that exposed Elizabeth Holmes and Theranos, WeWork's own paperwork acted as a sudden dose of reality, puncturing a carefully crafted private myth with cold, hard numbers. What followed was a brutal 6-week public execution. Within hours of the S1 filing, the financial press and Wall Street analysts began dismantling the document, turning WeWork's grand spiritual mission into a laughingstock. The promise of global consciousness dissolved under intense scrutiny. The panic was immediate. Major institutional investors refused to touch the stock, recognizing that the company was burning cash faster than it could rent desks. WeWork's perceived value collapsed in real time. Within days, the valuation plummeted from $47 billion to $20 billion, then $15 billion, and finally struggled to find buyers at even $10 billion. The arithmetic had finally caught up with the aura. By early September, the planned public offering was officially postponed. Without an injection of fresh capital, the giant lease machine was running out of fuel. Realizing the founder's presence was now toxic, SoftBank and the board turned on their profit. On September 24, 2019, just 41 days after opening his books, Adam Neumann was forced to resign as chief executive. The spell was broken, leaving behind a company drowning in billions of dollars of lease liabilities and a market suddenly awake to the high cost of buying into a feeling. Neumann's forced departure was not a defeat, it was a payout. While WeWork neared total collapse, SoftBank handed him an exit package worth over $1 billion. This arrangement included $445 million in cash and stock, $432 million in favorable debt refinancing, and millions more in permitted stock sales. As Neumann walked away with a massive fortune, the employees who had believed his spiritual message paid the price. Thousands lost their jobs, their stock options reduced to worthless paper. SoftBank took control of the wreckage, injecting a $9 billion bailout and writing down billions in losses. In a desperate bid to keep the brand alive, WeWork merged with a SPAC in 2021 to go public. It was a temporary band-aid on a terminal disease. In November 2023, WeWork filed for Chapter 11 bankruptcy, its value collapsing 99% from its peak. Much like the victims of Bernie Madoff, those who bought the dream absorbed the entire loss, while the founder walked away wealthy. The arithmetic always wins, but for Adam Neumann, the con had already cleared the bank. Neumann did not fool the financial world because the people around him lacked intelligence. He succeeded because he sold an emotional feeling that major investors desperately wanted to buy. In a hyper-growth market, a beautiful lie is often highly useful. It silences the math. The proof that this pattern repeats lies in what happened next. In 2022, Silicon Valley's most prominent venture capital firms stepped up to fund Neumann's new residential real estate venture, Flow, backed by a $350 million check from Andreessen Horowitz. The performance had officially received a second season. For anyone trying to spot the next illusion before it collapses, WeWork serves as a classic checklist of warning signs. Watch for grandiose mission language substituting for basic unit economics. Look for extreme, founder-protected governance structures. Trace the related party transactions where executives rent their own properties back to the firm, and watch closely when theatrical behavior is treated as proof of genius. Today, the markets still hunt for the next charismatic savior, proving we haven't learned our lesson. The next Neumann is already pitching. Every empire thinks it is too big to fail, but the most dangerous man in any room is not the one lying to you. It is the one who has made you want to believe him.